Hello traders, in this video we will discuss options volume, specifically 0DTE options volume, and explore the insights we can draw from analyzing this data. First, let's define options volume. Options volume refers to the total number of option contracts traded during a specific period. This data allows us to gain insight into market sentiment, anticipate the expected trading range for the day, determine profit targets and potential pivot points, in addition to confirm our trade thesis or idea. Before we put on any trade, there are always two questions that must be answered. Is there a directional bias, and what's the view on volatility? 0DTE options volume can help answer those questions. If there is a higher number of puts relative to calls, it may suggest a bearish sentiment, indicating expectation of a market decline. This is what's called put skewed, and we can visually see that there is more put activity than there is call activity. If there is a higher number of calls relative to puts, it may indicate a bullish sentiment and an expectation of a market rally. This is what's called call skewed, and we can visually see that there is more call activity than there is put activity. When calls and puts are relatively equal, it may suggest that sentiment is more neutral, and we may experience range-bound consolidation type action. This is called a balanced market, and we can see calls and puts relatively equal. This is commonly referred to as the put-call ratio, which can be analyzed either from an open interest or volume perspective. Now, while this is often used as a contrarian indicator, in 0DTE trading, we do not consider it as such, largely because these options that are being traded will not exist the next day. Therefore, they will have no lasting impact on the market. Now, how do you determine if the volume is call skewed, put skewed, or balanced? Many brokers will provide this data for you via a ratio, or you can simply look at the charts to determine put skewed, call skewed, or balanced. If you're having a difficult time determining the skew, it is most likely a balanced market. Next, we want to dive deeper by analyzing volume on a per strike basis. This can help us generate a view on volatility. What we want to identify is what we call the max call strike and the max put strike. The max call strike is the strike with the highest call volume, which we view as the upper bound. The max put strike is the strike with the highest put volume and can be viewed as the lower bound. If the max call or max put strike is far out of the money, there is increased potential for volatility. Whereas if these strikes are positioned closer to the money, it may be an indication of limited volatility in that direction. So just looking at an example here, we can see that the price is trading for about 47, call it 47.25. We got the max call strike around 47.50, max put strike 4700. So fairly balanced at the open. And we would view 47.50 as the upper bound, 4700 as the lower bound. Now, what's important to note is that options volume is not static, meaning it's always moving. Therefore, these strikes, the max call, max put, can shift throughout the day. So if the max call strike is shifting higher, that is a bullish indication. If the max put strike is shifting higher, that's also a bullish indication. Whereas if the max call strike is shifting lower, that's a bearish indication. Max put strike shifting lower, that's a bearish indication. So it's giving us an insight into how traders are positioning throughout the day. So if we are seeing that max call strike shift higher, it gives us an indication of potentially more upside. Conversely, if that max put strike is shifting lower, it gives us an indication of potentially more downside. Once you have determined the expected trading range, you can use these strikes or other high volume strikes as potential targets and pivot points. Let's look at an example. This is an example from December 22nd, 2023, and this is a volume snapshot taken at 9:33 a.m. Eastern Time. We can see we got 47.70 as the max call strike, 47.75 also very significant, 47.10 max put strike, and the SPX opened at around 4760. So we can already draw the conclusion that participants think the upside is limited and the risk is for a downside move. Now, initially, the market rallied into the max call strike and consolidated there for nearly an hour. What's important to note is the max call strike failed to shift higher, and eventually the market gave out and you had a decent down move. Technically, we had a setup as per our process here, SPY call wall, so very significant resistance, double cycle high. But the fact that this was also the max call strike gave us that added confirmation for our short idea. This is a volume snapshot taken at 1 a.m. Eastern time, so roughly around here. Max call strike remained unchanged, 4770. Max put strike, 4740. So shifting higher, so 4740 now the logical downside target and potential pivot point. Well, the market did sell off right down to 4740 before staging a decent bounce higher. Now, this was technically a setup as per our process as well. Double cycle low, flip handle, so very critical support. But again, the 0DTE volume provided that extra confirmation to hold our short, in addition to actually flip out of our short position and go long. It's important to understand how markets move. Markets naturally seek liquidity, causing price to gravitate towards areas of high activity, such as the max call strike or the max put strike, which then often act as support and resistance. Conversely, low volume areas generally don't provide good support or resistance. Price tends to move a little bit more rapidly and are just generally not ideal entry points for trades. Now, of course, options volume is not static and it doesn't work all the time. So it should be used in tandem with your process as we demonstrated here as a confirmation or negation signal. If you want to learn our 0DTE options trading framework, gain access to our market analysis, education, and daily trade ideas, visit our website at 0DTEtraders.com and become a member today. Hope to see you soon.